Cryptillians and crypto crackheads, today is Tuesday, March 30th, 2021, and you're about to get Timified. Once again, I do not know why I have my headphones on. So, for new viewers, my channel is quite a bit different than any other crypto channel. First off, I'm trying to do 2 videos a day, one on Bitcoin, overall market sentiment, in terms of what you can expect in the market, not talking about white papers and interviews with CEOs and trying to hype a coin. I'm trying to let you know what you should be seeing in the market, how to enter trades, how to take profit like a boss and not sit there and buy and pray and think you're going to grow wealth like that, which there are a few instances where you could. But anyway, I'm trying to help you essentially not get screwed when the market is not bullish anymore, and that will probably happen around December this year or early January 2022. The party will be over. Check out my library section for the market cycles and crashes video. It's in the description. And if you hear me say anything in the video that you're not familiar with, such as EMA or 20 bag, which means taking profits for that specific coin, not your whole portfolio. If you hear me say anything, you can go ahead and check the description section for library, and you should see what you're looking for there. In the near future, I will have all that pretty condensed as we go along, but hopefully roll that out before May. And second piece is my second video, typically a little longer than the first one. Each day is going to be about altcoins. So Cryptillians and crypto crackheads, which if you do hit subscribe and the bell, you need to leave me a comment you can leave me a comment about which crypto pronoun you like. Do you want to be a cryptillian or a crypto crackhead, assuming that you like the content here? But anyway, the second video that I typically make is about altcoins, because cryptillians and crypto crackheads see the advantages to growing wealth with smaller cap coins versus holding your big cap coins that get all the YouTube hype, because you don't grow wealth by following the herd, right? So anyway, that's what we got. And cryptillian, crypto crackheads, and perhaps patrons who come to get yelled at since I don't yell on Patreon, are you ready? I think I heard that. Okay, let's get going. So be the house. This applies to myself. I'm looking at Bitcoin on the 4-hour or the 2-hour right now. Okay, I've been ranting and raving every day about how I think that I have a short term to mid-term. Actually, no, it's probably more short term. Short term in terms of 2 to 4 weeks out, right? I have a 2 to 4 week out bearish sentiment about Bitcoin and pretty much all of the big cap coins, Cardano, Ethereum, etc., Litecoin. And so I talk about 2 things a lot in my videos for new viewers and Patreons and Cryptillians and Crypto Crackhead Nation. And so this is one of those moments, like as a content creator, I need to not forget that my face is big. Okay, that would help. I'm still kind of a noob at this, people, so get over it. I mean, you're probably going to hear my kids scream here in a second. But anyway, so this is one of these moments I'd like to share with you where I experience perhaps being biased myself, right? So when you are trying to grow wealth, when you're clicking around with your money, the hardest thing to do is control yourself and to remove your wishes, remove your wants, which is a bias, right? You have to try to remove your emotions and your own psychology from what you're about ready to do as you analyze what's happening. And it's very hard because so look at this chart. I mean, what we are looking at is the map of human psychology. Now, it's more like mass psychology, yes, but I myself am a part of this. I contribute to this. And when I'm trying to make good decisions, I have to essentially try to remove myself from it. And it's really friggin' hard. So the hardest thing about growing wealth when you're clicking around with money, and in whatever form you're doing it, whether you're doing it with trading gold on 50x leverage or traditional markets, Apple or Microsoft stock, whatever you're doing, I mean, your biggest enemy is yourself. So I wanted to share with you in this moment that I'm trying to remove my own bias in terms of bearish sentiment. So with that, I always say, be the house, you need to examine what your odds are, right? Okay, am I on the right side of the trade, or do I not have good enough odds either way, whether I'm bearish or bullish, so I should just sideline myself? So you have sellers, you have buyers, and you have sideliners, right? So in this moment right now, Bitcoin is on the short-term time frames, it's not doing what it would need to do in order for my sentiment to be correct with a house odds. Also, though, I don't think that I should turn bullish with what's happening on the short-term time frames, 4 hour, 2 hour, 1 hour. Although don't look at the 1 hour unless you're a scalper. And if you're a new investor, you shouldn't be a scalper because you're going to lose all your money. If you're using leverage over 5 times and you're new at this, you're going to lose all your money. Even if you think you're on a roll and you're hot shit, you're going to lose your money. So I would honestly just stop that. There's so much. My second videos are about altcoins, small caps. There's so much less risk. You can't get liquidated. And as long as you have a safe entry, it's kind of hard to lose your money if you have a very safe entry and you know what you're doing. So for my new viewers, if you're out there using leverage and you have not established a track record of 12 months or more sustaining profits, or 6 months, if you can do it for 6 months straight, then you're probably well practiced and you've already lost your account more than once. You've already liquidated yourself over and over and over, probably 3 to 5 times to get to the 6 month mark. But if you're newer to this and you haven't sustained profits for 6 months, just trust me. If you are just so destined to play around with leverage, don't use more than 5. I strongly suggest not using more than 5x because if you do, you're going to lose your money. It's not a question of if. It is a question of when. And I would say that applies to 99% of people. I mean, I'm hella good at math, like multivariable calculus, like 95% grades in college and stuff, or even high school. I took multivariable calculus, but which I actually got an 89.2 in high school, which made me not be valedictorian my last year. But I aced it in college. But anyway, in multivariable calculus. But anyway, I'm really good. I'm good at the patterns. I also went through the process of feeling the pain of being on the wrong side of the trade, being stubborn, and just watching my account go down, down, down until it was 0 after I had just 20x'd it in 3 weeks. I thought I was hot shit. So when you use 5x leverage, you still get to feel the pain and you get to desensitize yourself to emotions. Therefore, in the future, you can remove it. I'm going on a tirade here about leverage, but it's really important because I'm hearing a lot of people doing it. And if you're new, you're gonna screw yourself. Play around with maybe like 5% of your portfolio and don't use 5x more than 5x leverage. That's my suggestion. But anyway, so back to topic. Okay, so I'm in the situation where I want to have a bearish sentiment. Okay, so I have to stop what I want. The market doesn't freaking care what I want. It doesn't care what you want. So stop wanting things. So I'm catching myself here, perhaps because I'm a content creator. I've been saying I think it's going to go to 42K on a moderately slow decline, no crash or anything. It'll just slowly get down there. And so I want to make sure that you all, can experience this with me. So right now, I'm not on the wrong side of the trade necessarily. Actually, yes, I would be on the wrong. I would not have house odds if I continue clicking around with a bearish sentiment. Right now, we are essentially in a no trade zone. Okay? So putting in leverage longs or putting in leverage shorts, it might not be a great time to do that until Bitcoin decides to go one way or another. And what I think a no trade zone would be is from this yellow line here to maybe these local highs here. So I'm not doing jack crap until Bitcoin goes out of this. So for me, even with my prior sentiment from yesterday when price action was here, right? I became a sideliner from my yesterday's video to today. So I want you to experience what that's like. So, I have skin in the game, not just, money. I actually closed my shorts. So my Cardano and Litecoin shorts per my Twitter posts for the public. Like I publicize what I'm doing and what entry points I had and everything, even taking snapshots of it, not the amounts necessarily, but I really don't play a lot with leverage when it's altcoin season because it's silly. Anyway, I closed all my shorts. I entered Bitcoin a little later than my other shorts. I think I entered Bitcoin maybe here-ish. So I when it hit this trend line, I think that's about no, actually no, I was doing it this trend line. And I added here. So I kind of, started seeing my losses being taken here, and once it got up to here and it was looking really confident on the 4 hour, once I saw this candle strong, that candle strong, and the 4 hour did come down, and then it started going great. I got out of all of it right there. So I took a very small loss, maybe like a 2.5% loss on my Bitcoin short, but I had like 40% gains. So almost 1.5x my holdings of what I was playing with Cardano and Litecoin. So I got scared out. Now, will Bitcoin end up coming back down? So let's go to the weekly chart so you can see why I want to have a bearish sentiment, right? But again, price doesn't freaking care what I want, so I have to stop wanting it, right? And why do I want Bitcoin to go down here, like on a personal level? Because I want to get it here. I want to buy more Bitcoin here, right? But I have to, when I analyze stuff, I have to stop wanting, and so do you. Like, you are your biggest enemy. So I'm at the point, as a content creator, I've been saying it, so I have skin in the game, like, on the internet, plus in my money, my shorts, which I closed, so this is a cool moment for you to experience me battling with my own self, right? So in that moment, once a Bitcoin, let's go back to a shorter time, let's go to the 2 hour, because the 2 hours are really, that's the play right now. I mean, the smaller time frames can cascade and convert the larger time frames to flipping. It happens. It does happen. So, and it could happen here. So anyway, I have become a sideliner, and I will remain a sideliner until Bitcoin is out of this zone. Okay. So a lot of people like exact levels. I'm going to say a little above my blue line. I will not take action and become bullish until Bitcoin passes and closes with a 4 hour candle. I don't care if Bitcoin wicks on a half hour candle all the way up here. I don't care if it goes to 64,000. I don't care. I will not enter until a 4 hour closes here. It's the end of the candle. So end of the candle and a new one prints like that. But I wouldn't wait for it to print that high. Obviously, I would wait for it to go boom, like the start. And you can see the timer. So see where my cursor is here? So if I go to the 4 hour, you can see, so there's about 1 hour left in this red candle here, right? There's 1 hour left. So if Bitcoin price were to come up here, on this same candle, and it happens when this ends, right, with 0 minutes, and then the new candle prints here, that is when I would become bullish. But within the hour, so before this 58 minutes is up, see where my cursor is right there, the red? But within that hour, if Bitcoin goes like this, and there's even 1 minute left, I'm not going to enter. Because a lot of traders who are taking people's money by tricking them, especially tricking the pattern traders, they often drive price up just so people go long. Because they need you to be longing so that they can short on your face. And then it comes right back down and closes here. Happens a lot. And the 4 hour is a big play. Happens on the daily as well. So that would be what's called, what I just said there. If Bitcoin were to come up on this candle and then come back down and close here, right? Which actually would make it a green candle. It would be a small green candle, like almost like this shape, right? In that situation, that would be what's called like an end of candle attack. So the people have the plan to, when this candle, 4-hour candle, has just a few minutes left, they will use their, you know, fairly large bags, or it's a coordinated plan, or it's a hedge fund, or whatever, where they can move price just like a, you know, 0.2%, which this really isn't that much price. Yeah, it's a 1%. So, you know, a coordinated attack could probably move Bitcoin, or if many people are thinking the same thing, right? If they see it starting, right, and they're like, okay, this is probably end of candle attack. If it happens with 15 minutes left, they'll jump on the train. Like when you see a coin pumping, a lot of people jump on that. Well, that's what's happening down to this level too. People trying to short on people's faces right here because they see the end of the candle attack happening. That's why it's so important. So when you see this line, I'm not going to become bullish until it hits this line. It's not just passes the line. It's closing a candle. And the higher the candle that you make for yourself, for example, if it closes a daily candle here, if it comes up here and closes this entire day, that is even safer than waiting for a 4-hour candle. But statistically, out of all the times you'll miss a little bit of the moves by waiting on the daily, versus the risk of only waiting for the 4-hour candle, typically over time, a 4-hour candle is a good play. Okay. You know, the people from whom I've learned trading, they typically say they typically like a 4-hour candle for that balance of confirmation versus risk. Yeah. Versus like 3 things mixed in one, confirmation versus risk versus how much of the move am I going to miss, you know, because within one whole day, it could scream up all the way here and I miss out on all this, you know, because I didn't enter because it didn't close, right? Do you see what I'm saying? So like that's a pretty good, 4 hours, a pretty good confirmation candle for those reasons, right? So, so I am a sideliner right now. Do you have to be? No. It's possible that you're playing other time frames and your trading style is completely different. But if you're new to, you know, trading and clicking around with money, which that's kind of AKA trading, if you're new to this, I mean, what are you going to be seeing? You know, unless you're playing 15 minute stuff, you're just going to lose all your money doing that, by the way. Anything under the 2-hour, I think you're going to be losing your money. And I really don't suggest it, especially if you don't have 6 to 8 hours a day looking at a screen doing this. I strongly suggest you don't use anything under the 2-hour. You're just going to be screwing yourself because you're missing the bigger picture of what the real direction is. Unless you're good with taking like, you know, on, let's say you're using 5x leverage, you're okay with always taking profits after a 1% move. You don't care how much it goes. That's actually pretty safe. But you need a lot of screen time for that. Like I almost guarantee you, I would say fewer than 3% of the people watching me do that. Those are the people who are on the computer all the time doing this, like as a day job. So, you know, if you're working 12 hours a day or 14 hours a day, you're in manufacturing, a plumber, a lawyer, whatever, you don't want to be doing that. Therefore, the 2-hour and above is what you need to be looking at. Okay. So anyway, so this end of candle attack here, that also happens on the weekly scale. So let me pull something over here. So let's start with number 1 here. So this is the daily chart, right? But we need to be thinking weekly because we're thinking, what is the possibility of what we're seeing here? Because the week just started, right? Like however many, let's see, when did the week start? How many hours ago? Yeah, a couple days ago, right? The week just started 2 days ago. So we're trying to think, okay, could this be a beginning of week attack as opposed to an end of week attack, right? So it's a different strategy, but it's the same concept. People pushing up price, they jump on the train, they see other people doing it, they're guessing that other people are doing it, as opposed to flipping their mindset of this is now bullish, because this is a no trade zone. This is like the perfect area to do a beginning of week attack. It's perfect, right? So, and so what that would result in, if it is indeed a beginning of week attack, essentially, and I'm not for sure if that's actually the right terminology, but I think it is. Anyway, so when you're thinking of that on a weekly scale, is this a beginning of week attack? you need to look essentially at one time frame down, but be thinking about the time frame up, right? So you need to be thinking, what will that just one candle look like if I separate it into 7 candles, okay? In this case, daily versus weekly. So what that would look like is so currently price is actually printing green, and it's about here, right, on the daily. So this candle is not red anymore. It has gone up. And it could wick all the way up here and not close a 4-hour candle. And therefore, this should go away. Right, this would disappear. Okay, so this would be a green candle. And then the next day could start here and close seriously that low because the attack's done. They got enough people to long in this no trade zone that they were able to put enough short position that they wanted for their ambitious goals. They baited enough longs in the no trade zone because they have to have longs in order to short. There is a cap of how much you can short. The cap is how many longs are there. Seriously. And I think that's by the exchange. Anyway, what could be playing out, and again, I need to remove my bias. Do I think this will happen? Am I betting on this happening? No. I will not bet on this happening until it breaks this yellow line. It gets out of the no trade zone. I'm only thinking about this as a sideliner. For me, no trade is the best trade right now until it comes out of this zone, right? This zone right here. Okay, so but what something to be thinking about is, okay, well, are people simply being baited these 2 days and then we're going to print some nasty, nasty reds? Technically, this candle would start down here like that. But anyway, you get the point. So don't judge my candles because I drew them earlier before I added, here. But anyway, so will we have like really, really thick red candles after this? It's possible. That's why keeping a big eye on this, the bottom of the no trade zone, is a big deal. Because if you're longing and this crap happens here, you're screwed, especially if you don't have stops. Okay, so that is the one thing that I'm keeping in my mind. I don't want it. I'm not betting on it. I don't have house odds on it. I don't. You have to stop caring about it, right? Just know it's possible, right? It's a possibility. So, step 1, daily chart, but think weekly. 2, typically in the beginning of week attack, it prints a big red, or a big green candle or 2 big candles. Number 3, just what I said. So this pretty much all this says is the other days are red, or most of them. And then, yeah. And so number 4 was more for my patrons because I released this information earlier. So yeah. So this is this you are experiencing me essentially live, right? Becoming a sideliner. So this is what it means to become a sideliner, is what I'm doing. Now, am I a sideliner on my altcoin positions, which I will cover in my second video? No, hell no. Our group is scouting out all sorts of friggin' potential breakouts and good dips to buy and all that stuff to play ranges, right? Ranges are very profitable, even if you're not getting a breakout. You buy a 50% dip, and then a price of whatever asset, BPRO or whatever, goes up to its previous high of the range. You're doubling your money on one dip, doubling with no breakout. And then typically you can do it again, because a lot of times it takes 3 tries to break range. It comes back down. You buy the dip again. You double your money again. You're freaking, now you have FU money, right? Like, depending on how much you're playing with. But keep doing that this whole bear cycle for, reserving 10% of your portfolio for simply buying dips and playing ranges. That could be, that could grow to like way more than 10% of your holdings. So that's an example of why buying and praying is so horrible. OMI people, Phantom fans, Harmony One fans, Cardano fans. So I'm not going to rag on your project, even though I think all of those that I mentioned, I'm not saying any of those are bad projects. I'm saying that I believe your gains will be very weak compared to how we're playing with small alts. But at the same time, your bags will increase if you, for example, play ranges and you you sell high and you buy back lower and you play ranges. And then when your breakout's coming, you don't, sell at the top of the range if you have reasons to think it's going to break out. Cardano makes all-time high past $1.50, stuff like that. You can grow, like the best way to grow your Cardano bags, to grow your Phantom bags, to grow your Omi bags is to sell. Not all of it, right? But when you have reason to believe it's ranging out and it's going to get hit here, like in my Veracity video, it was my altcoin video from yesterday. I covered Veracity, which I can't wait to make my second video. I haven't looked at what Veracity's doing. Hopefully I didn't misguide anybody. But anyway, let me take a peek. This is a Bitcoin video, Tim. Shouldn't be doing that. Okay, so it's still kind of in a no trade. Okay, so it hasn't really done a whole. It's gone up a tiny bit, but which means actually it's just getting more and more bearish divergence, which is more reason to take profits. Anyway, so experience this with me, right? Because part of trading is you have to feel it. You have to feel it. You have to experience it for yourself. And when I have patrons message me and say, hey, you talked about ADB or you talked about DAPPT, I'm down 30%. I ask them, where'd you enter? They tell me. And I say, do you think that was a good entry? This and that. And, now you feel what it's like chasing green candles and buying glory. Don't do it again. It's a good experience. You have to go through it. So, some really big mistakes can happen if you don't know when to become a sideliner, right? Especially if you're new here. Being a sideliner, no trade is sometimes the best trade. So, perhaps as a new person, you have not experienced this before. So experience it with me vicariously now, right? So hopefully you can share this experience so you can desensitize yourself. Or maybe not, this necessarily isn't, it's kind of desensitization. But just know that this is the type of moment that would be becoming a sideliner from a seller. So I have converted myself from a seller to a sideliner, okay? And if it breaks this, I will become a buyer. So right now, I don't think I have house odds here, and I don't think I have house odds here. Therefore, the house is closed. Like, it's cleaning time. Like, this is maintenance time or something. The house is, the kitchen's freaking closed, So that's what I'm going through here. So let's take a peek at Cardano. I mean, yeah, it's in a no trade zone too, folks. I mean, I'm not going to make perfect horizontals. I just want to scribble here, but something right here. So around these, so this is the 4-hour time frame. So in no trade zones, I mean, it's okay to use a 2-hour or 4-hour because the change happens quickly. So therefore, looking at the daily or the weekly, I mean, sure, you can see it there too, but these no trade zones are the types of moments that, assuming you already know that you're a sideliner and why from the weekly scale, right, or in the daily scale, since we've already covered that, for Bitcoin at least, now we can just stare at 4-hour or 2-hour so we can be nimble with either becoming a buyer or a seller, because right now we're a sideliner, right? We're in no trade zone. So yeah, these wicks here, so something like on Cardano, $1.35-ish, $1.34.8, so 1.348, something like that. That would be, if it closes a 4-hour candle above that, then it's gonna, like, the chance of it breaking all-time highs and not coming back down and fall flat on its face and going like this, or going like this, it's extremely high. And honestly, since it's already given 2 attempts here, if it closes a candle here, I mean, the chances of it coming back down are like pretty dang low. Are really low. Typically that third try, it doesn't fail a ton. honestly. So yeah, so once you see Cardano closing a 4-hour candle above $1.34-ish, it should be game time for Cardano folks, holders. So anyway, the other way though, I would say this is more of a territory. I don't know if I can draw one single line for this. I would say something like, I would pick somewhere like this to, I'm trying to line up a lot of candle bodies and a lot of price action where it ends. It all ends and or begins at the same time. I would say something like here. So this is kind of like a trickier play because I would not convert myself to a sideliner, to a seller for Cardano when it enters here. But this space, this is like the verge of becoming a seller. Like alert, hey, I need to be looking at the screen or whatever because becoming a seller is imminent. But I wouldn't necessarily be the house yet. But this is like the tides are turning in the favor. And when you close a 4-hour candle here, then boom. Like if you want to take on short positions, you are statistically much safer, right? But the line is much clearer for the upside. If you close a 4-hour candle above here, it's going to make all-time highs. Very, 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 very likely. So that's what I'm seeing on Cardano. Ethereum, I don't cover Ethereum very much. Ethereum's been pretty boring, pretty lackluster recently. Although I am, the rest of this year, pretty freaking bullish on Ethereum. Even though they've had some announcements where it might make it a little more lackluster than I thought, but and potential other platforms stealing some of its thunder. So I don't know. You have to gauge that for yourself. I just see it in the charts. I don't sit here and read white papers and compare projects versus each other, but because all of that, I can see it here. Right? A white paper doesn't tell you when to take profits, does it? No. A CEO interview doesn't tell you when to take profits, does it? No, the charts do. I can see your pumps, and I can see when to freaking take profits on your face as you're buying, and I'm taking your money, and you're giving it to me willingly because you're looking at freaking white papers and listening to Schiller YouTubers saying, "Oh, Harmony won," after it goes on a freaking 3,500% run. Don't buy glory, people. That's the way to get screwed. That's the way to get screwed. I mean, this is no trade zone for quite a while. How big is the no trade zone? This is pretty tricky. How much of a percentage range are we even working with? So 40, it's kind of big. Let's just start drawing and see what happens. I would say above this local high. So above that local high and close the 4-hour, the chance of establishing new highs and not doing something like this is extremely high, I would say. Maybe not extremely high. I would say it's house odds though. And then, so you got some support here, or no, resistance here, support here, support. Yeah, so this is a pretty solid line. This line's a pretty big deal, actually. So I think the lines are pretty clear here. If Ethereum closes a 4-hour candle below this line, which is coming in at roughly 1718, and the top line is 1930. So anywhere between 1930 and 1780, I mean, this is this for me in my style, this is a no trade zone. Either way, you are not the house. So why the hell are you clicking around with your money? You aren't the house. So freaking close the kitchen. 86 everything, right? 86 for people in America when something's out, like you have no more carrots or whatever it is. You just say 86 carrots. But anyway, but I would say 90% of Americans should know that term. I mean, because I would say 90% of Americans have worked in the food industry at one point in their lifetimes. Maybe not that much, but it's a high number. So yeah, I mean that's what I got for you today. I think I'm going to end here. So hopefully, you are understanding by this point that reading charts is not the most important thing. You need to be reading yourself. You need to know when to become a sideliner and just accept, I lost house odds. And also accept when you're freaking wrong. But hopefully you get to that point of, I'm a sideliner first. Of course, unless like Bitcoin price just like, and this could happen. I mean, it could absolutely happen. Unless Bitcoin price just goes in one day, okay, you had no sideline time. You are now bullish. Because if it breaks all-time highs and you're not bullish, you're an idiot. And honestly, it does look pretty strong. But I don't think either has house odds. So just know that not everything's in the charts. It's kind of like fitness, right? Relate this to fit, and I'll wrap up with this. It's kind of like fitness. Go to the gym and run all you want, right? If you don't have kitchen discipline or you focus on your nutrition, if you don't, so I call that kitchen discipline. If you don't have kitchen discipline, the level with which you can meet your goals, or how high you can set your goals in terms of your physical, whatever you're looking for, are much lower. It's about half and half. Half of the battle is in the kitchen for fitness, and half of the battle is in the gym. And most people don't understand that. And so that's pretty much the same with clicking around with your damn money and trading. Interchangeably using that, but I like to say clicking around with your money because that's what most of you are doing. Unless you're buying and praying Omi, with Omi, then you're not clicking very much. You're just praying. You're on your knees praying a lot. So half of the battle with clicking around with your money is yourself. So like if you're not the house, for example, you need to understand that you need to look inside the kitchen, and sometimes you got to close it down. Okay. So half the battle is yourself. It's not just in the charts. It's half and half, just like exercise is half and your nutrition's half. Clicking around with money, it's half in the charts, half in yourself, and you have to rein it in and don't expect. And also, okay, so in that second part, have your expectations good. You're not going to do it perfectly. So for every type of mistake possible in trading, like being obnoxiously stubborn with your shorts, as Bitcoin's going up, you see your money losing and losing and losing, and you're like, nope, it'll go back down because for those of you who don't know, if you're in a big short position with leverage and prices going up, the amount of money that you have from your original amount is shrinking. But if price were to come down, then you are in the profit. Like all of this gets ignored, right? So it's like perpetual, it's fluid. So I think if anybody plays around with leverage without some type of mentor or coach or whatever, you're going to do that to yourself. And most of the time it'll keep going up and you're going to screw yourself. It happens to everybody. And it usually happens more than once. Unless you lose like $100,000 in that one time, then you might only do it once. But if you're playing around with only 10% of your portfolio, it takes minimum 3 times of doing something stupid. Maybe not the same mistake. Sometimes you can learn, each mistake, you're probably going to do it twice. So a lot of my viewers, you're chasing glory a lot. You might do it again in the near future, right? And you're going to feel it again. So for every time you feel it in the future, just realize that that's still money for you. Even though you lost money in that trade, you entered when it was screaming up and now it's 30% down because you were an idiot and you chased glory. You bought, as Bitcoin was going up, you bought it here and then it goes, ooh, I'm going to correct and make a base here. Now I'm down 20%, right? I bet almost all of you have done that. Hell, I did that in 2017, 2018, quite a bit. Not 2018 because everything was down, but I did it in 2017. Everybody's done it. So you might have to do something like that 2 or 3 times. And after the first time, you'll be less susceptible to it. Like you probably won't do it as frequently, but it'll probably take 2 and 3 times where you realize, shit, this is a rule. No matter how appetizing it, like me and Viacoin. Okay. So if I had only been through this experience one, buying here and then it comes down on my face, I would have bought Viacoin. Absolutely. But I've done this so many times, probably 5, 6, 7, 8, 9, 10, that I just, it's like quitting some habit, like nicotine, alcohol, whatever. I just quit. Doesn't matter if somebody offers me a cigarette or a beer or whatever, I quit, right? So at one point you will quit, but it doesn't necessarily happen out of the first time. So that is like emotion, psychological management for yourself. That's the process that you can expect for yourself. It doesn't always happen in one shot. Don't expect yourself to be perfect, but just be mindful of it, that is the process. And if you stay in this space for even until December, you're going to go through that. You're going to go through it. And just realize that when you lose money, that's fine. If you stay with it and you don't do it again, you're going to get that money back and more because you learned it. It's a valuable lesson. Even though the lesson looks red, it's a red dildo slapping you in the face, sure. But you will leverage that and not do it again, and you'll catch some damn good moves. And you'll tenfold that loss, right? But you got to learn from it. Be mindful of it. That's all I got. And cryptillians and crypto crackheads, you just got Timified, new viewers. If you liked what you saw, if you feel that you understand the market just a little bit more, go ahead and subscribe and let me know if you're a cryptillian or a crypto crackhead. I like knowing people's crypto pronouns. We'll see you next time.